Welcome to this week's Gig Harbor real estate market update, and we're going to be talking about what just happened in the Supreme Court regarding Washington State's capital gains tax. And we're going to be finding out if you are on the hook to pay them. So without further ado, let's get into it. I'll admit I didn't know too much about Washington State's capital gains taxes until I started researching last week's taxes in Washington State when we went through all of the taxes a retiree would have to pay. Basically, Washington State passed capital gains tax, and then that was legally challenged by Chris Quinn versus Washington State, and that was in the courts for a while. But was it last week, this Washington State Supreme Court said that this tax was legally enforceable and, to start charging people for it. So we're now at the point where people are going to have to start paying their capital gains tax. And it is estimated that 7,000 households in the state of Washington will now have to start paying this tax. Advocates for this tax say it is a step towards fixing Washington State's regressive tax system. And what is the regressive tax system? Basically, Washington State has no personal income tax. And usually personal income taxes from other states or the federal government are progressive. What does that mean? Basically, the more money you make, the more you're taxed on it. And the less money you make, the less taxes you pay. Washington State, however, has no personal income tax, and to make up for the fact we have no tax, the government gets its revenue from property taxes, sales taxes, and business and occupation taxes, on top of other taxes like gas tax and cell phone tax. But basically, when a person, let's say a poor person, pays $80 to fill up their tank of gas versus a rich person pays $80 to fill up their tank of gas, the poor person has to pay a lot more money for taxes in comparison to their income. So the rich person, $20 is nothing for gas tax, versus the poor person, they get burdened a lot more with taxes. More on this later when we're going to look at some arguments for and against this tax. Basically, what I'm trying to say is people are saying that this is a way to tax the rich so they can actually pay their fair share versus the poor and middle class, who has to essentially burden a lot more tax percentage on their income. Now that you know a little bit more about it, let's go look at what the actual details are of this new tax. The first thing we're going to look at is how much is this tax? Well, basically, it's a 7% capital gains tax on any money made on the sale of stocks, bonds, and other assets above $250,000. So if you, let's say, sell some stocks and you have realized gains of over $250,000, you pay anything above that. So if you made $260,000 gain on your stocks, you'd be paying 7% of the difference. So 260 minus 250 is $10,000. So you'd be paying $700 in taxes to Washington State. When is this tax due? Well, this tax applies to gains made after January of 2022 and is due on or before April 18th of this year. Who is responsible for paying this tax? Well, as any individual and not businesses. Well, there are some exceptions to this, but as any individual who sold, again, an aforementioned stock, bond, or other asset, and they gained more than $250,000. So if you sold something and you had a $10,000 gain, don't worry about this. Only on anything more than $250,000 in gain. This tax has been implemented to pay for early childhood education and the construction of new schools in the state of Washington. Now, the next question, are there any exemptions to this capital gains tax? And according to the Department of Revenue, the exemptions are, let me read this off, real estate sales and 1031 exchanges, retirement account assets, so that's the Roth IRA or 401k, any timber or timberland, particular agricultural products, commercial fishing privileges, and eligible family-owned small business. And specifically see RCW 8287070 for which business criteria meets this exemption. And getting gains paid through an S corporation does not exempt you from having to pay this tax. Why does this not affect real estate? Well, in Washington state, we already have a progressive real estate excise tax. So otherwise we'd have a double taxation on potentially people selling their home, especially in King County, when they have gains of $250,000 on their property, or $500,000 if they are married. Does this tax apply to cryptocurrency? And the answer is yes. It is considered another asset just like a stock or bond. Now, you only have to pay this tax on cryptocurrency held longer than a year. So this is a long-term capital gains tax, not a short-term capital gains tax. Now, if you're considering, just selling under a year to avoid paying this tax, just be mindful that you will be paying short-term capital gains tax on the federal rate. Do married couples have a higher shared amount like with real estate? Because in real estate, if you're married, you have up to $500,000 in capital gains exemption. No, this is not the case. $250,000 is $250,000 in capital gains. You don't get $500,000 exemption. So yeah, no dice. Can I use tax harvesting strategies on short-term capital gains to offset this long-term capital gains tax? And the answer is no. Are there any deductions I can take to reduce the amount of taxes I have to pay? Yes, you can. There is a $100,000 limit of charitable deductions you can use if you donate to Washington-based nonprofits. So you can reduce the amount of taxes you pay by charitable donations, and that's per year. How can I avoid paying this tax? So the answer to that is you have to essentially have residency in a different state. Just like with the state tax that we covered last week, basically you have to live in a different state that doesn't have a similar kind of tax, basically for more than 50% of the year, and you can avoid paying this Washington state capital gains tax. Let me read this other paragraph by a law firm that had something to say on the subject. Wait a second here. Let me take my face away. Basically, according to law firm Perkins Coie, taxpayers can spread out their capital gains over several years to utilize the full annual $250,000 deduction using charitable remainder, unitrusts, or other available methods. They can also give the assets to lower income beneficiaries or non-grantor trusts to minimize or avoid the tax altogether. And I'm not a tax advisor, so please talk to your tax advisor regarding this method. So that's pretty much all you need to know about the capital gains tax here that's being reinstated in Washington state. And now for some of my thoughts on it. Basically, this tax is meant to tax the rich, and that's all fine and dandy. For example, if a tech founder sells $10 million worth of stock because they just founded the company, and then they can sell it to essentially finally pay themselves. Basically, they'll be looking at $682,000 in capital gains taxes to just Washington state. So while 7% doesn't sound like much, that is just to Washington state, and of course they're looking at a federal tax income as well, and I'm sure that countless other taxes that they pay. So while I'm all for taxing the rich because childcare costs are incredible, I'm glad it's going to a good cause, and we look at the amount of money that childcare costs. So that's good. However, I'm also wary that as soon as you get the government involved in something, it's actually going to increase the costs like it does with healthcare. So that's something to look out for. Will childcare costs actually go up, as we subsidize it? The government is a big fan of when you give them an inch, they take a mile. So what do I mean by that? Basically, if they pass something innocuous and it's like, oh, tax the rich, only 7,000 families will be paying this in Washington state, don't you worry, you have nothing to fear. I'm always kind of hesitant because, what happens if they say, okay, well, we also include short-term capital gains tax? Or what if we lower the threshold to $100,000 instead of $250,000? Or what if we add in real estate? Well, double tax is fine. I mean, these people have too much money. We can just take some of it to pay for, government programs. So that's always, that slippery slope argument that, the government, once they get something in there, they can then exploit it to whatever they see fit. And we'll look at that here in a second when looking at the pros and cons of this tax. All right, now we're gonna look at an argument here by, I'm gonna take my face away so I can zoom in, by Nick Hanauer, 7 reasons why the capital gains tax is good for Washington state. He is a venture capitalist, and let's go look at his points here. He's got 7 points. Highlighted them, the ones that I thought that were most important. The first one is Washington has the most upside down tax code in the country, where lowest income families pay up to 18% of their income in state and local taxes. And people like myself and other contributor of this article, which is Matt McMillan, pay next to nothing. And this is why I go back to that gas tax that I mentioned earlier. Again, he just iterates this point there. Rich people like me are not the true job creators because you're venture capitalists. Okay, that's fine. Middle-class consumers are. All empirical economic evidence shows that a thriving middle class is a cause of economic growth, not its consequence. So increasing tax rates on the wealthiest while annoying to the wealthy people is not harmful to growth. In fact, it leads to economic growth because it gives us the resources to invest and grow in the middle class. Because it exempts homes, retirement accounts, and family-owned small businesses, this tax will only be paid by absolute riches of the rich, and will still be paying next to nothing. If I have a $1 million windfall in stock profits, I'll owe the state $52,000. A pretty measly sum for super rich folk like us toward funding education and childcare for Washington kids. We have, point 5, we have a massive childcare crisis that is seriously affecting the productivity of the parents in the workplace. And this helps fund childcare for working and middle class families as well as new school construction. And point 6, the idea of wealth flight has been extensively studied and debunked as a myth. They're just empty threats by rich people are used to getting their way. If it was true that high tax rates have killed innovation and growth, Silicon Valley would not exist. And last point is businesses flock to Washington because we invest in our people and our infrastructure, really in infrastructure, huh? Our world-class universities and our spectacular parks and public spaces. And that's why our state is consistently ranked as a top state to do business and the #1 economy in the nation, including since the passage of the tax on capital gain tax profits. Okay, so those are his points. All right, now for the 7 reasons why the capital gains tax is bad for Washington State. Another venture capitalist here. Since Washingtonians rejected a state income tax by 64 to 36% in 2010, the state has prospered economically and substantially grown tax revenues. If the ruling stands, it will be detrimental to job creation, innovation, investments, and tax revenues for our state in the years ahead. So here are his 7 points. Washington State had $40 billion in tax revenue growth in the past 12 years, from 26 to 66 billion, over 150% tax revenue growth versus 15% population growth. Point 2, the existing state tax system encourages investment, job creation, and economic growth, and our state's success in creating work opportunities, innovation, innovative products, and increased tax revenues were the envy of most other states. Point 3, the state already has the only tax, the B&O tax, in the country, and high excise tax and fees, including the second highest cell phone taxes over 20%, third highest gas tax, 52 cents a gallon, and a progressive real estate excise tax. There is a myth about point 4, when the state had over $10 billion of tax revenue surplus last year, the legislator and governor did nothing to lower excise taxes, state sales tax, and gas tax that are viewed as regressive. So I think that's a pretty important point. 5, the era of hybrid work is likely to be to reduce in-office work requirements, gives people and companies unprecedented mobility to work elsewhere, and they will move to a community and government that serves their best needs. Basically, he's saying that people can leave if the taxes are too high. 6, the unprecedented excise tax on capital gains income will both encourage people and companies to leave Washington State, see the Fisher Investments announcements, and discourage others from coming to live and build their companies here. This new tax is bad news for the state, opens doors for countless of the state and local excise taxes, as evidenced by a bill already introduced to raise the capital gains excise level to 8.5%. and lower the threshold to $15,000. Wow, that would, I would probably leave the state if that happened. This will hurt the economy and innovation. Okay, last point, this new excise tax also violates the U.S. Constitution, primarily because it levies an excise tax on activity outside the state. Income taxes can reach across state lines, excise taxes cannot. Options are being explored for federal court and congressional challenges, along with efforts to evaluate the statewide initiative to overturn the law. Well, there it is. Those are the people for and against. And okay, there you have it. That's the for and the against argument. I agreed and disagreed with both contributors, but I thank them for writing and educating us a little bit more about both positions. I think we'll probably be seeing, the 7,000 families paying it by April of, that's next month here, before it gets challenged, probably in federal court, or they'll repeal it in a statewide initiative. That'll probably happen here soon, but not before taxes are collected. And I hope it does get repealed, hopefully before more adjustments are made to it to punish the middle class. Otherwise, yeah, that'll be bad news for the whole state. Anyway, even if it doesn't get repealed, it's even more reason to put money into real estate investments and not into stocks and bonds. So please diversify, and I think real estate is the way to go if you're looking to invest. Yeah, it's funny how financial investors never say invest in real estate. Well, they don't get paid from telling you to invest in real estate. They want to have as much money in your account as possible so they can charge their percentage. Anyway, that's I digress. Thank you for watching it this far. I hope you liked it. If you did, please hit the thumbs up button and hit the subscribe button. And I do this on a weekly basis, and I hope you get a lot of information out this that you wouldn't otherwise find. And everything real estate, Gig Harbor, and nationwide and state level is found on this channel, so you'll never be uneducated. So until next week, have a pleasant weekend, or whenever you're watching this, and I bid you good day.